today, the latest from the property market frontline. Hello again, it's Martin North from Digital Finance Analytics, one of the latest posts covering finance and property news with a distinctively Australian flavour. And I'm joined, finally, by Edwin Almeida. Hello, Edwin.
G'day, Martin. How you going?
Yeah, pretty good.
Home. I'm working from home today.
I see you're fully kitted up.
Well, you've had that, Doomsday Uppercut Adams on your show a couple of days ago, so I don't know what I'm going to catch if I'm doing an interview with you. Although be it on Skype, I know there's some bugs that travel through the computer, so you never know.
You can never be too careful. And, I suspect that more and more people will be thinking about getting some kit just in case.
Look, I think if people aren't getting ready, in all seriousness, if people aren't getting ready and taking different precautions, I think it would be silly all around. I mean, we can muck around as we do, the old Aussie style that we take things seriously. Sometimes we take a serious matter, we turn it into a bit of a joke, but it's something that we do have and we must take seriously, given of what's happening around the world.
Yeah, well, I don't know whether you saw, but I posted an interview yesterday with an academic who's been looking at what the universities are doing and specifically how they're bribing the Chinese students to basically go to a third-party country. They'll pay the money and then they'll come down to here, sort of going round the regulations, as it were.
Well, I posted something yesterday, and it was, it's like an auction at the moment. It's like an auction fest. It's like a Saturday auction scenario. We've got UWS offering $1,500. You got the University of Melbourne offering $7,500. I wonder when Sydney Uni or New South Wales Uni are going to come in and up the bid for with $10,000, and let's see who pulls them in a lot quicker, a lot faster, without taking the right precautions. Look. I've got a lot of contacts, both family, friends overseas in Asian countries, and there's a lot more going on than what we've been told. And for the almighty education dollar, we're just going to lower the bar in order for this great nation of ours to get infected. I should hope not, and I would hope that our followers, our listeners, our viewers, call the local parliamentarian and lodge a complaint simply because of what's happening. Why put ourselves into a mix? It only takes one person, Martin. It only takes one super carrier to infect a whole nation. England put out a report today, I think, and by I think CNN put out this report that was leaked over in England, and something like 500,000 people could potentially die in the best worst case scenario should the pandemic hit England. I mean, that's astounding, and yet we're trying to lower the entry level point and controls around our borders. For what? Just to keep the hedonic index rising? Is that what it's all about? So we can keep the auction rates and the BS auction clearance rates up and up and up and up. Is that what it's all about? Our whole economy based on construction or housing for that matter, or as equity, mate. What are we doing? We really need to take serious stock of what's going on.
Yeah, I think you're right there. And Salvatore, who I spoke to yesterday, was pretty damning of the whole system and the fact that the government is likely to compromise public health just to meet the expectations of the university sector. But you started to touch on property, and of course we need to talk about property. Last time we spoke was before Christmas and before the bushfires, and we were suggesting then perhaps that we would see some uptick simply in momentum because people will perhaps want to sell. So what are we seeing in terms of listings, and what are we seeing in terms of price dynamics?
Well, I think one of the things that a lot of people are confusing is, with regards to supply and demand or listings and the property prices, is the confusing the fact that yes, property values are going up, but you got to look at the underlying reasons as to why they're going up, and predominantly it's because, in the most part, it's because apart from the economic side that you often talk about, which is low interest rates and everything else, I'm talking about from an agent's perspective, and that is there has been the lowest amount of listings, particularly in Sydney, that I have seen in the Sydney region in perhaps 5, 6, 7 years, if not more. We went down from what would otherwise drop over the Christmas break to about 18, 19,000, and even then it was breaking the 20,000 mark was a novelty. But we actually went down to 13,175 listed properties for sale, and a lot of them, of course, were apartments and the like, and new properties that were being built. So in essence, there was a lot of buyers, a lot of enthusiasm, but not enough property. So there's two sides that we've discussed in the past, Martin. One is obviously the lower numbers, the low volumes, as well as what that's actually doing to the real estate economy, the real estate industry economy, meaning my colleagues that are suffering because they don't have enough listings, offices that are closing down because they don't have enough listings. The rent rolls, property management, only make up for 50 to 60% in the better offices of the revenue for to keep the overheads going. The rest is made up in sales. So, and yet there's approximately 54,000 real estate agents in New South Wales, to give you an idea as to what's going on, and the small amount of listed properties on the market. So post we came into January, then we had the bushfires, of course, everything else, but then we saw a bit of an uptick. 4 weeks ago, I started noticing an uptick. We went from 13,000 or so, 13,500 listings to we started pushing the 15,000 and 14.5, close to 15,000, and now we're up to 15,000, I think 15,649 last time I checked today. And we're starting to push closer to the 16,000 mark. So there are, yes, it is the seasonal change. Yes, we are going to get a lot more listings coming on, but let's remember that this time last year, which wasn't which was an average year in terms of listings as well, we were already tracking 19,000 plus properties on the market. The year before that, we were closer to 22, 23,000. In subsequent years, we were up to 24,000. So there's not enough stock. Now, the question is, of course, with these coronavirus and the pandemic that and what's happening globally right now, the question is, what are the overseas investors going to do with their investment, given the fact that, particularly from China, they are absolutely getting smashed from the reports and the inside information that we've been getting, very reliable sources that I've been sharing with Tarek, from an avid commentator on Twitter. If you want to follow him, he's got his finger on the pulse, and I believe he does some interviews with you as well, Martin. So he's a great bloke to follow. He's very down to earth. He's not as hysterical as Uppercut Adams, and not as much of a doomsayer as what I am. But he sort of levels us out. So there's some interesting data out there. So I've seen. I'm still saying that at 17,000 listings, on the market in Sydney, in the Sydney region, because that's what I pegged my numbers on, because that's where I work, obviously. That's what I'm basing it on, as to what's happening, because it is a reflection. Sydney and Melbourne are a reflection of what's going to happen to our economy anyway. So at 17, I'd say the brakes will be on in terms of these the hedonic daily index going continuing to track upwards. I think we'll see a change. The sentiment will change from being a vendor's market to a buyer's market. How quickly we get there, will we get there, is the $64,000 question.
Yes, interesting. Well, there's a few things to pick up on that. I mean, did you see the REA results, which came out quite recently? Because, of course, they're very much driven by revenue based off listings, and their revenue was significantly down because the listings were down. So, of
course, it's a given, and I mentioned that to a number of my Twitter followers, and I said keep an eye on Domain and keep an eye on REA, because the revenues are going to be downgraded because of the there's not, agents aren't advertising. When you go from 26,000 in the peak, I think we hit something like 29,000 properties listed for sale in the Sydney region, and that's when the market was hot. So a lot of people saying the market is hot now. Yes, it's very hot for vendors. If you're going to sell, if you've got a good property to sell, you're going to achieve above reserve, as many agents put it, because for various reasons. But you are going to achieve a very good price because there's not much around for sale. So you go from 29,000 listings, property listings, in the majority secondary stock in the Sydney region, to 13,000. I mean, nobody seems to be talking about that in the mainstream media. They don't seem to be focusing on that, but yet they want to focus on the hedonic daily BS index, and the auction clearance rates. Let me say that. Did I mention that, Martin?
Yeah. Now, on the hedonic index, it's worth noting that the rate of growth has been easing back for the last couple of months, right? So it was growing the fastest, if you look across the national average, last year, and it's now growing more slowly.
Because the numbers aren't there. The numbers are rising. The numbers properties are coming on the market. The smarter vendors are starting to sell now. Make hay whilst the sun shines, and get the best price. So that's what I'm saying. My tipping point is 17,000. At 17,000, this market's going to come to a screeching halt. Anything above that is going to start. We're going to start seeing drops. Once again, I'm a believer in that. It's just the government's thrown so much at it. I would have expected a lot more listings to be on, but I mean, you and I know that there are things that are beyond our control. There's talks of all these interest-only loans that are going to have to turn into principal and interest. There's going to be more pressure on investors. The retail industry is up the proverbial, is down the proverbial up or down, whatever, in proverbial gurgler, whatever. It's basically shot itself. And there are a lot of other industries that are now suffering because they can't get components from China because of this coronavirus. So this is something that's outside of our government's control to an extent, and this is when now we're going to see the reality. Let's see who's the best man that's going to be standing at the end of the day.
Yeah, well, it's very interesting. I was talking to somebody else about the property market, and he was saying, look, there are certainly some pockets where prices are quite strong, and they tend to be at the upper end of the market in the more exclusive suburbs. But if you look more widely in other places, particularly over in Western Sydney, over there's almost no growth, and in some cases prices are going backwards. So, I think the averages that these indices try and represent don't represent reality. And as we've said before, you need to get granular and really look at the local information.
Yeah, and when you and I did some numbers early last year, we looked at the numbers, and in some of these suburbs that are now, you see this huge price growth. Don't forget they were also the suburbs that experienced the 30, 35, 37% drops in property values, which were not talked about. Yep. Because it was taboo to talk about, because it didn't benefit the masterminds of the hedonic daily index. Did I mention the hedonic daily index? I don't know. But it's just one of those things. Going back to REA and Domain, Martin, I've said that keep a close eye on what they're going to do, because they've when I looked at this about 3-4 years ago, the collective revenues for advertising across both platforms that real estate agents were spending was close to $2.5 billion. Now, the revenues across all real estate agents earned by real estate agents was something like 15. Now, obviously, so now that the revenues have dropped so much because of the fact that there's the listing numbers are down, I said back then within 5 years, and so we've got another 24 months, maybe 36 months to run, and I put it out again that we are going to see them convert into your, for lack of a better expression or lack of a better analogy, your purple bricks. They're going to take over that type of model, where they're going to use real estate agents as fee-for-service type agents, where they are going to be the main portal. After all, we all go there. we all go there to look for property. As agents, we advertise on those platforms. So they've got the market cornered, and that would be the most logical thing for them to do. And I brought that up 3-4 years ago, and I think we're getting a lot closer to that coming to reality.
Yeah, well, I think you're right. The disruption is going to be quite interesting, and it's going to certainly change the relationship between real estate agents, their customers, and the portals. And of course, they're just battling it out, aren't they? Domain versus REA. So they're the two major players.
Yeah, they are going back to the listing numbers. I'll post out some more numbers later today, because Thursday night seems to be where they all sort of max out as to getting ready for the weekend sales and open house inspections. It's been interesting following the numbers. I don't follow them that closely, the ones from Melbourne, but they're certainly surging ahead with actual numbers for sale in the Melbourne region, as opposed to Sydney. Sydney seems to be slow in that surgence. In terms of, I haven't heard a lot. I only know of about 5 listings in Sydney that have been properties that have been listed on the market due to the coronavirus and people overseas needing to sell out quickly, because obviously they've got to protect their interests over there. They've got to protect their businesses and principal places of residence over there. Admittedly, my Asian colleagues that I normally talk to and that provide a lot of information, some of them are not even here, unfortunately. They're stuck over there, and a lot of them just won't open up. There's not a lot of information coming out. WeChatter has absolutely come down to an almost halt as to get information from what's happening over in China. So that's rather interesting. But I dare say we are going to get we are going to tip that 17,000 barrier that I discussed earlier on. How much higher we go above that will be interesting, but I think and that's my tipping point, as I said, for the transition from being a vendor's market to a really buyer's market in pretty much in almost any part of Sydney. But how long that goes for before then we see the Asian money come back into the Australian market is another, could be another topic of discussion for future reference, Martin.
Okay, very interesting. Now, I had one question about auction clearance rates, because what we are seeing is essentially the rates higher, but there's something funny going on, because it seems to me that the number of auctions that are listed to list, as it were, is always lower than the ones reported. And that seems to be a consistent trend.
Oh yeah, look, I think you and I and the better part of all our followers understand that you got to take the auction clearance rates with a grain of salt, and more so from a compliance and a regulation. You got to take the EPIA hooray stories of achieving $1 million above reserve and $300,000 above reserve when the property is listed for $600 and it sells for $900, or for $3 million and it sells for $4.5 million. You got to take that with a grain of salt, because I put it to one or two things when I read those stories. I don't even bother reading them, because it comes down to one or two things, Martin. One is the agent doesn't know how to value the property in the first place, and gave the vendor the wrong indication of price. And what if they only got $3 million and $10,000? Look at how much they would have missed out. And secondly, it's underquoting. So it can only be one of the two. There's nothing in between. It's either underquoted, or the agent should pack his or her bags and leave the industry, because they don't know what they're doing or how to value a property correctly. With the numbers that are being pumped out, again, I've just lost an appetite to follow them, because they're absolutely meaningless. And I've been tracking some interesting data and information that the front end of Domain, REA, and also CoreLogic put out, and even the back end of CoreLogic, when you do what we call a market appraisal, and you try to get a summary of or a particular guide or the value of a property, you find that they are so much out of whack in terms of prices, and it goes both ways. They're so far out from the best case scenario, and they're so far out from the other side of the spectrum as well. So you really got to take these figures with a grain of salt. As I said, I know a lot of people don't agree with me, but hey, folks, don't shoot me. It's my industry, and that is that you've got to reach out to your local agents, and don't just reach out to one. Reach out to a number of agents to get a better understanding and perspective of what's happening in their patch, their suburb, their local area. And there's a lot of information out there on public domain as well that you can research to compare what's being said and then put all together to make a decision.
Yeah. And I'll tell you one other thing. I've had a number of people write to me in the recent weeks saying, we've gone down the list of properties that are told us, as presented as cleared at auction. But in fact, those sales were from weeks earlier.
Yeah, because they're just, like I said, it's this, look, you got to take all this with a grain of salt. I mean, how much can they push this narrative of greatness and so forth, and values going up and auction clearance rates going up? As I said, I've simply lost an appetite to even read. I don't even give them any credence, because you look at those articles, Martin. You actually look at the articles and you bypass them. And look, I know I've started to look at some of the authors or the reporters of these articles, and you look at the engagement they have across different social media platforms, and it's staggering how little response they're getting to the articles as they publish them. And look, I think that means something. Look, we don't have as big as platforms as Donald Trump has, 66 million followers, but it does say something that Twitter has become a very a platform in order to propagate a message, and it in a way more so than Facebook and even LinkedIn for that matter. I haven't been on LinkedIn for about 6 months, but Twitter seems to be a good gauge for me to see the relevance of the author of a particular article, because they're either retweeted, liked, or shared, and the conversation just goes on and on and on and on. And these tickle and giggle, fluffy pillow property reports that we're getting from a lot of prominent publications are absolutely staggering. I really don't understand how these people, why these people can be employed in that sector of reporting. They should go back to reporting on on what's happening at Harvey Norming, or selling mattresses and fluffy pillows at Harvey Norming or some shit like that. Yeah, because some of the stuff that comes out is just absolutely staggering. Unbelievable stuff. But hey, that's the way this world is turning, and how what, again, going back to what we're saying as to what's going to happen with the numbers and real estate in Sydney in particular is the other interesting thing that I've been watching is the fact that it's taken a hell of a lot longer for in a number of suburbs for properties to rent out, and I've had a number of investors discuss that with me in private and talk about even potentially putting their properties up on the market for that reason, because things are tight economically at home, and things are taking a lot longer. So, but then again, you've got to take into account the fact that there's approximately 100,000 students that weren't able to come back because of the coronavirus, and a lot of other people, and a lot of other people from the Asia Pacific region that would also otherwise come over for various reasons and stay longer than what they should. But obviously, this is taking a toll, and the rental market, which isn't discussed a lot, is a good indicator of what's really happening at the grassroots levels, or at the foundation levels.
Yeah, well, I follow this, of course, through my surveys, and I am definitely seeing two significant events happening. The first is there are higher vacancy rates than we had a year ago, particularly in Sydney and Melbourne, and particularly for units. And the second is that there's been no rental growth at all. In fact, people are having to discount rents to get anybody to take the property. And then if you run those two sets of factors through into the economics of an investment property, it's actually almost impossible to make a return. So you can understand why people are now beginning to think, well, hang on a moment, is investment property worth it at the moment?
Yeah, and that's when the pressure really starts. Really starts coming on. As I said, okay, I was being out by a little bit longer than a few months. But it's coming. It's coming because the pain's there. The government's throwing the bathtub, the kitchen sink, the baby. They've sacrificed the firstborn. I don't know what's next. I don't know what they could do next. I don't know. Get circumcised, maybe. I don't know. They could do something, but I don't think. Yeah, I just can't think of anything else that the government can throw at, because I don't think they've got any more ammunition to throw at this.
Well, I'm still expecting the first buyer 95% grant, the count to increase. So I would expect them to announce in the budget they're going to do more of that, not just an additional 10,000, but probably a lot more than that, because there has been quite an uptake. Although interestingly, I also note that some of the people who've tried to get the loan weren't successful because of the broader affordability questions that the banks still have to cover.
Yeah, and I can't wait. Look, I can't wait for the first case to be litigated and see what happens with the loan. I know that the banks are taking first position or first charge over the mortgage, but it's going to be interesting to see, because we're not talking. The number that gets thrown around is 15,000, and so many people that I've talked to are absolutely confused and say, "Oh yeah, the government's going to lend you 15,000." No, you don't. The government's going to lend you 15%, which is equivalent of about 75, potentially $100,000 when you break it all down. So it's a huge mortgage, and to carry this double mortgages around, but it's going to be interesting. Look. We've got the Australian dollar. I think it's hit an all-time low for a while now. I think it's at 65.67 or something or other. Yeah. When are they going to defend the dollar when it hits 50 cents? I think every cent that the Australian goes down, it's got to be. It's a huge reflection on the cost of living expenses that are going to increase, and so regardless of the interest rates even going to further and going to zero, people are already strapped as it is. It's an interesting time to be alive in.
Yeah, well, I think we'll be watching this ahead, because I think it'll be an interesting ride, as you say, quite unpredictable. And we've been saying for some little time that there's more risk the downside than the upside. I have to say that I think those risks are increasing, and I see you're putting your kit bag on just in case, eh?
Well, yeah, that's it, Martin. So enough said, and I can only live dangerously for about 20 minutes. So now the kit comes back on, and it's until our next chat.
All right, great to talk with you, Edwin. Thanks so much. Take care.
Always a pleasure, Martin.
So there you have it. Edwin's perspective, as normal, is perceptive, but also quite concerning. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.